Hey guys, how's it going? Welcome to the London session recap for Friday, the 25th of March 2022. So, you guys, super familiar hopefully with the higher time frames now. I'm not going to spend as long breaking them down, but essentially 4 hours bearish. We've come up towards a swing high. So, the expectation is that we should come down and take out that week low. However, we have to have in the back of our minds that we're coming off major extreme monthly, weekly and daily demand, right? So there is that potential that we could continue kind of these larger internal bullish swings to continue that deeper high time frame pullback, right? And the 4 hour may switch bullish if you map structure the same way I have. Cool. But if we zoom in a little bit and kind of look at the price action that we've been dealing with all week, we've been in this kind of very tight, choppy range. We're basically bouncing between this continued demand chain, and then we also have this very sort of near supply chain that was forming. This specific 4 hour supply zone here did not break any structure, right? Because that's the internal low and that's the internal high on the 4 hour chart, because we came down, we pulled back, we came down, and then we took the high, and then all those candles broke the prior candle's high. So playing within that range. So technically this level has not broken really any structure. So it's potentially a weak high, but as we can often see with chains, right, it just comes up, it plays ping pong between sort of the two zones, the demand zone and the supply zone. So with shorts being in line with the overall swing trend on the M15, the 4 hour, the daily, the weekly, right, shorts are always kind of going to be favored. And then when we come into this 4 hour supply zone, right, there's always going to be a decent chance of at least a small reaction, which if you're entering with 5, 4, 3, 2 pip stop, right, that's enough generally to be able to remove your risk and for there to be a decent RR trade worth in there, even if you only target the middle of this kind of little range we're playing within, or potentially down into this extreme wick, or with the small potential, well, not small, who knows, but the potential that we could break out of this demand chain, right, and continue down to that week low. But very simply, just looking for those kind of quick, nimble trades, longs from down here, shorts from there. And that's basically the way I trade it and keep it simple. M15, so playing within this larger range. However, we've obviously had this very clear supply chain that's been forming throughout this week. And then during Asia, we came into this extreme supply zone, which is nested within that 4 hour supply zone we were just discussing. Very nice clear sweep zone there that led to a lot of momentum, right? So obviously a lot of supply came in that level. And then during Asia, we had these nice equals form, right, trapping those early sellers. We then swept those highs, fell to close above the high, which is what I love to see with the sweep. And then that gave us our bearish change of character. So this is perfect, exactly what I love to see coming into sort of the start of the session, specifically the London session, right, where essentially you have an area which is what I would call very well priced, right? It's in the premium, it's kind of at this extreme supply chain. Yes, we have, this extreme supply up above, but really this is, for me, a very high probability area to be looking for shorts. Then we have our classic textbook sort of price action we like to see, right? Sweep those highs, leads to a nice V-shaped reaction with the chalk, okay? So this would have been really ideal to look for shorts from that M15 extreme, but of course, if price starts to break down, it's not always going to pull back to that straight away, right? So once we had that bearish chalk, it was kind of a little bit messy, just sort of pre-Frankfurt, sort of pulled around, then continued. We did have an IBOS here, but kind of fell to close below. But then what I saw, or what I liked, is then when we continued the order flow, so on the M1, we can kind of see these swings in price. But what I liked was that price then had another M15 internal breaker structure, and it just about closed below that low. So if you look at the low here, it is 241, and then the close here is 240. So it's literally 1 micro pip, but for me that counts. So then you have this supply here, okay? So what I was looking for was, well, I took it basically an M1 continuation. You can kind of classify it as an M1 risk entry. This is where it gets a little bit debatable, but essentially looking to, I set limit order within in here, which I got stopped out of, okay? Which is always running the risk that of course price could come on and mitigate something within this wick, right? Which is what it ended up doing. Then it kind of got a bit choppy and messed around, which we'll take a look at on the M1 as it's a bit clearer. And then eventually it started to drop out. Well, I was looking at this level of M15 demand, not really to buy from, unless it kind of gave us real clear confirmations, ideally like an M15 chalk or potentially a lot of bullish order flow on the M1, but more so just to be aware of this if you are shorting into it, right? To take partials, etc., etc. Right, no inducement in the leg, no clear sweep of liquidity. Arguably that's a sweep, right? But this is where it gets a bit subjective with depending on how you define your liquidity sweeps, because all of these candles break the prior candle's high, then we simply pull back, right? And then we go up, and then we continue like this. So there's no real sweep of a structural low, but that would be a very clear sweep on a lower time frame, okay? So yeah, that's basically what I was looking for. Shorts were, very, very decent and high probability on the cards. The only kind of negative I had at the back of my mind was just that the 4-hour demand chain was holding right, and we could be seeing that larger high time frame pullback, but that's not really going to put me off from wanting to take, a quick trade within here. It's just more about, do you want to then try and hold any shorts to swing it? That's what the kind of the monthly, weekly demand, element of negative confidence. That's the way I'd be thinking about that. It's not going to put me off looking for some quick shorts for here for that London momentum, right? This is real high probability to be looking for those shorts, but it was just a bit messy, kind of London and Frankfurt and London Open to try and get in if you were trying to kind of have that tight 2-pip stop loss on the M1. So let's take a look at that, or at least the way that I read it. So yeah, as we kind of continue to sell off before Frankfurt Open, price was all the way down here, right? So we're seeing a lot of bearish order flow, nice momentum to the downside. This blue box here is that M15. Let's change this to 3 charts, a little bit easier to look at the same time. 1M, cool. So yeah, so this blue box here is what I'm about to talk about, and that is this here, okay? So this is when we had that initial internal breaker structure here, and then we had another one here. But I like this because price just about closed below, which gives a bit more, strong confluence to this being a decent supply zone. Obviously bearing in mind that price could come up and mitigate this wick. But what I liked about it on the M1 was that, so this is basically this trade here that I'm talking about here, okay? So what I liked was that, zoom in a bit more, nice big bearish momentum, right? We came down, another breaker structure, and then a swing here, and then another breaker structure. So kind of following those swings, breaks of structure, but also looking at this, right? It swept liquidity, so we had a pullback, sweep those highs, break of that structure there, pull back in and mitigate that level, and then we come down, right? So I saw that as what I like for my continuation model, a sweep of liquidity with a mitigation, and then that continuation. So, if this sort of supply chain is going to hold, that bearish order flow, also combining with that M15 zone, I was happy to set a limit on here, which just got stopped out. Always running the risk that price could come up and mitigate sort of more of this extreme unmitigated supply zone. If you kind of look at the M5 swings of price, right, you can see that that's one swing. So kind of always knew in the back of my mind that was a possibility, and that this could be inducement for above, which is what ended up happening. So it is what it is. I'm more than happy with that loss, to be honest with you. So once price came into here, right, your other option, of course, is you could set a limit on both. I know a lot of people do that and have a lot of success with that. I personally don't love doing that unless it's on the very extreme supply zone, say like up here, then I'm a bit more willing to be aggressive. But once we came into here, then I'm happy to look for the confirmation entry. So let's use bar reaper here, because otherwise it can be a little bit confusing because there's a fair amount going on. So I get stopped out of my my initial position, was the words I was looking for. Price comes into this zone here, okay? So now I'm thinking, okay, either this zone's going to hold, we look for that M1 chock, which would be this level here, right? That being the nearest internal low, or price is going to come up to these extreme levels, and then I'll start to look for, our standard entry model, another M1 chock, right? So let's play this forward candle by candle. So we come down, now we have our M1 chock. Nice big sweep of those equal highs into the POI, big V-shaped reaction. That's exactly what I want to see, right? Frankfurt volume's kicking in. I'm more than happy to now set my limit within this M1 supply zone. However, it's quite a big candle, so using a fixed 2-pip stop loss, you always run the risk that you might not be tagged in, but that's cool. I'm just keeping it mechanical. That's the way I trade. Volatility still seems kind of on the M1 at least back to sort of pre-Russia-Ukraine war, so 2-pip stop loss doesn't look too small, so I'm happy to keep it like that for now. So then price came back in, tapped into the supply zone, and then missed my order by about 0.3 micropips or something. And then at this point, I'm leaving my order on, and then we come down. So kind of another candle. So like at this point here, right, we start to get momentum. I'm gonna have to think, right, what are the odds now that price has come in and mitigated the pivot, not just the range, but actually the actual pivot candle supply? What are the odds that price is going to come back in, mitigate it, and continue? There's always that possibility, especially when it's a large candle, right? Because they can be very clear, like 15 or 30 second zone in here, etc., etc. But generally, if the pivot's mitigated, then I like to kind of count that as done, and then look for like the next unmitigated level for price to then pull back into, and then potentially and hopefully continue that move. But when I looked at these candles here, I was happy to do that. And I was happy to look for, just to do it for once more. I wouldn't kind of keep chasing it down here because you're getting near to this low now. Risk reward's not on your side, especially if price can come back up. I don't like chasing it too much when you're trying to play kind of a tight continuation, right? When you've got all of this stuff up here as well. But I'm happy to do it kind of one more level. But the way I saw this was this level here was already mitigated, right? Because price had come in, tapped into it and gone. If I kind of had just done that and then gone, like just that inside bar, fine. But I kind of felt like, that's a decent enough of a move in for what is a bit more of an aggressive entry. And then I'm looking at the next candle here. There's nowhere to enter, right? This isn't, really a valid zone because the next candle failed to close below the low, and it's kind of too low down now. I knew there was still a decent chance price could come back into here, mitigate some orders and continue. So I just didn't have really confidence about this. I didn't like it. So I still left my order on at this point. But then as price then pulled back in, it did end up mitigating the EQ of this and more of the orders within there, and then continued down. At this point, this is then when I cancelled my order because I thought, right, okay, well, I don't want to start looking for entries within here because this is what I was just saying about I don't really like chasing at this point, right? The risk reward's not my side, and I just don't like it. It's too aggressive for me at that point. It tends to get messy and start sweeping things. So I want to get in here or at a push here. If I miss that, I'm leaving it. I'm going to be patient and wait. So yeah, hopefully that makes sense as to why I didn't take this. I knew there was a decent chance it could hold, but I was just like, for me, this was mitigated and this wasn't a clear zone, so I left my order on. But then once we started to come down to here, this is when I then cancelled my order up here, right? Because for me, what are the odds that price is going to have enough orders within here to continue down? Well, obviously, there's still that possibility, but I just didn't like it. So this is kind of when I was thinking, right, I'll either miss the move or I'll wait for something clear to set up, or I'm going to wait for here. Or I wait for price to come in here and then give me another confirmation entry. Okay, so yeah, I cancelled my order, which would have been nice in hindsight if I had left it on. So price messes around a bit. It comes into there. All right, gives a small reaction. So this is when I thought, okay, yeah, there was enough orders to give a bit of a reaction, but I don't think there's going to be enough to give us another continued move because it's already done that. It's already filled some orders and gone. Now it's filled up some more orders, had a bit of a reaction, and then this is when I was expecting it to come up here and basically stop out the early sellers, right? But it then had a very nice reaction and gave us a bit more of a sell-off, right? That's when I'm like, I really like this, right? Strong momentum. There's a chuck. So then I'm thinking, okay, where am I going to enter? Well, even this isn't the cleanest because you've got this unmitigated wick. Whoops, that wasn't what I was looking for. But then you have the flip here, but even this isn't that clean because yes, there's a reaction and a push down, but it's all just kind of like all of these candles break the prior candles low. It's all kind of just one down move. There's no kind of clear pullback, right? Well, then you have that. So even that I didn't really like, but because it wasn't super volatile, getting a fixed 2 pip stop loss, I could enter on the EQ of this flip and cover that high in case it mitigates something in the wick. So for me, that's where I then set my order. I was happy enough with that. I was aware there was a flip here. Again, not the cleanest, right? Because there's no structural pullback. All of those candles break the prior candles low, but when you see it form in real time, you can see price react, right? It comes in, fills up those orders, fills up in a high. So I knew there was a flip there, but again, is that going to be something I'm going to set my order on? No, I'm going to want to stick to those extremes when we're kind of playing these sort of tighter continuations. I don't really want to chase price. I want to be getting in near the top of the pullback, especially when this is no inducement. Didn't sweep. For me, it didn't sweep. I know some people view this as a sweep. I did used to view this as a sweep. But basically, price comes up and breaks the high of the prior candle because on the lower time frames, it would be clearer. But for me, that's not the way I define an M1 sweep as things stand, okay? So yeah, so that's where I had my order. I wasn't still in love with it, but yeah, that was where I was kind of happy to take the risk because of the higher time frames, right? You're getting in, remember, at the start of what can potentially be that large M15 move. So even if you're just targeting here, the risk reward is still on your side, right? You're entering at the top of this sort of tight 4-hour range. These are always the areas, start of this session, this is where I'm happy to just be looking to get involved because I know that there's a decent chance, right, you're going to see at least a 10-hour move from these levels with a 2 pip stop. Okay, but yeah, not happy enough to basically chase that from that level and then mitigate that level and then went and started to die. So obviously cancelled my order once these lows went and didn't get tagged in. So yeah, there's kind of a few ways. The easiest and simplest trade would have been this one from the extreme of this pullback, seeing all of this as inducement. So I know some of you are a bit more aggressive and you could have taken both of those entries to take the loss here and take the win here, right? Hold on to your trade. you would have been, if you managed the same way as me, 25% of 4R, that would have been enough to cover your stop loss, and you wouldn't have been stopped out here, so then you would have stayed in the trade, right? And then there would have been more than 10R down towards these lows with your remaining volume. So that would have been a clean trade if you had taken both, or you had taken just this one. I know some people did that. Or of course you can sacrifice some RR, right, to do both of those, but I don't typically like doing that. And then then the confirmation entry, I didn't get tagged in here. There was arguably this flip, but for me that's too aggressive personally. Although another argument for that is that this wick here did mitigate this supply range, right? That being the M1 supply range. And this is something we've been digging into a lot more recently, and something I'm bringing a lot more into my trading, is that kind of once that range is mitigated, then you can kind of follow the order flow. It's a lot less likely that pivot then is going to get tapped into, and then you can continue that movement, right? That's kind of a decent way of looking at things. So yeah, I appreciate this can kind of, when you're new to this kind of style or looking at the M1, it can seem a little bit messy, but as it's forming in the moment, I personally find it's a little bit clearer to read, but I just prefer to kind of stick to those extreme levels, and I don't start liking to chase it down here, because this is very easy when you start to get chopped out. So that was a very clean position for me. That was very clean as well. I just didn't take it, waited for the CE, then didn't get tagged in. Would have been beautiful if it did get tagged in. Then I don't want to chase any of this really. And then came in, gave us another confirmation entry, and just didn't get tagged in on the flip. So yeah, a bit frustrating. -1R session for me. And it's one of those things, right? Actually, let me just quickly talk through the rest of it. So at this point then, I wasn't really interested in any of this, because we were coming in very, very near to the 715 demand zone. Even though I didn't really want to look for longs from within here, I don't really want to trade short into it. There's high impact news as well, so wasn't really paying attention unless price came all the way back up here, which it didn't. And at that point, again, we've mitigated this demand level, which I don't really like, because this formed around spread hours, so I never really trust these candles, because that's just the spreads blowing out. But where are we in the M15? We're getting into the discount levels, and also if we just kind of forget about the larger range, but look at this kind of smaller 4-hour range we're looking at, right? You're shorting in the EQ at the moment, so this is kind of where you want to stick to the extreme. Stick to the shorts up here really, and stick to the longs down here. This level is going to be, especially for longs, it's not ideal, right? This is the higher probability stuff, right? Or if you want to keep shorting, at least you're trading with the overall momentum, the internal and the swing structure, and you can keep following the order flow, right? And that's the path of least of resistance at which we would expect. So what was the point I was going to make? M15. So this is something I know I've been talking about starting to test. So yesterday I finally had some time to kind of really start to dig into it, and this is something I want to get doing a lot more, because when I get to my desk pre-Frankfurt London, especially setups like this, like I have a very, very high conviction that this sort of move is about to occur, like really high, but it's just about getting in, right? And on the M1 that can be tricky. You can get stopped out with a 2-pip stop loss here or there, right? So this is where it's kind of just like, especially when we get that internal breaker structure with the close below, it's a little bit messy, but generally you kind of got two levels on the M15. You take the EQ of this range here, or you've got the extreme when you take the distal or the EQ. This is all stuff I'm testing, but essentially you've got kind of those two M15 levels you want to short from, this level here or this level here, right? That's more than worth it for me for 2R risk spread across those. And obviously even if you just get 5-6R down towards this level, these entries come across, I would say at least 10 to 15 times a month, sometimes more than 20. Where you can just focus on these pro trend moves, and that's something that I'm digging into a lot more. Yes, the RR is nowhere near as nice as the M1, but you could think about, this is what I'm trying to work out with, right? It's going to take me a good while to figure this all out, but this is what I'm digging into, is adding this on to also then looking for my standard M1 entry models. But this way, if I have a bit of a frustrating morning where I take a loss here or there, or I don't get tagged in the M1 entries, at least I've bagged my 5R or plus, however I'm going to manage it, I don't know yet. But that's basically what I'm digging into to add to that. But also for you guys who just want to start to get some consistency and some R on the table, do not be afraid of these M15 entries, right? Look to get involved, or even the M5, right? The M5 is a beautiful, beautiful time frame in which a lot of you should be looking into, in my opinion, right? It can move a lot nicer and cleaner. But yeah, I'll leave that there. Hope you guys took some value from that. I hope you guys have a good weekend, and I'll see you in the next one. Cheers, guys and girls.